Good morning and welcome to the Market Forecast. My name is John Hoagland. As always, thanks for trusting me with your time. It is Wednesday, April the 25th, April the 21st. As always, we're hoping for accurate context for you, as well as good risk management and infinite patience. We are very excited here at Top Step today. I'll tell you why in just about a moment. Starting with the economic numbers due out this morning, 9:30 EIA Petroleum Status Report is due out. Really the only thing that we are looking for that is currently on the calendar. Tomorrow, we've got a pretty good data dump. So we're going to be checking that out tomorrow morning and dealing with any movement in the markets created by that. As always, I'm praying for peace for everybody. And okay, here's why I'm excited. Here's why we're all excited here at Top Step. We've been talking about it. We've been teasing about it. Today is the day. The first couple of features of Coach T go live. Look for some information in your emails. Check your dashboards later. This is very exciting, something that we're putting together that's basically an extension of the performance coaches. Probably going to put me out of a job at some point, but we've got a lot of dev to do before that happens. I would miss you. I hope you would miss me, but I don't think that's really going to happen. As far as market news is concerned this morning, Netflix earnings beat expectations, but low subscriber growth sends shares lower. We've got all of the U.S. equity indices opening to the downside this morning. We've got Verizon, Next Era, and Halliburton, just a couple of names of earnings that were already out this morning. This afternoon, we're looking for Chipotle, Discover, and Whirlpool. Not sure if any of those are going to be all that impactful like Netflix was, but we always like to name a few of the names that are coming out as far as earnings are concerned. We're really ramping up the speed of those earnings this week. Crude oil is testing lower, testing supports following stocks to the downside a little bit and still sensitive to global COVID infections. The API last night announced a small boost in crude stocks, about 430,000 additional barrels in storage. The EIA is looking for a draw of just under 3 million barrels today. So, as always, we'll have to wait and see. They don't seem to be very accurate in all of that information. They seem to be quite off in their expectations. And it's not the EIA; it's everybody else that's keeping track and keeping those numbers. Speaking of numbers, I was thinking about what is a trillion. What is a trillion? And I've got some statistics here that I find extremely interesting. Here's one, and I'm going to be kind of going through these over the next few days because I think it's very difficult for me to wrap my head around the concept of what is a trillion dollars. Okay, now I've checked these numbers. You can check them. I'm pretty sure they're accurate. If I were to spend $40 per second, every second I spend $40, I could spend $1 billion in 289 days. If I were to spend $40 every second, it would take me 792 and a half years to spend $1 trillion. It's how much money we're talking about throwing around. It's just mind-boggling. Thought I'd throw that in there. As always, make sure you like, share, comment, question, feedback, and heckling are always welcome. The VIX this morning up a little bit at 1880, as we would expect the VIX to be up a little bit higher this morning as stocks are kind of moving to the downside. The dollar index up slightly at 91.35. 10-year yield 1.56%. 1.56%. So the yield kind of keeps on creeping back to the downside. As always, we have group coaching today. Always looking forward to that. Put the link in to register for that and look forward to seeing you there. And hopefully you'll bring some really good, challenging questions. I learn as much from all of you as you may learn from me in those sessions. I truly enjoy them. Good morning, Theo. Good morning, Felix. Theo, first in the room, you win the prize. Felix, good morning. Happy Wednesday. Joseph, Bill, good morning. Brian, Murph, good morning, world. Getting cold and windy and rainy here. Yeah, we had a cold and rainy day yesterday. It's just kind of cold, but sunshiny here today. Murph, also remember, stick to your plan. I do so much better when I stick to my plan, and don't we all? Even if you stick to your plan, even if it's not profitable, at least you're getting consistent data, consistent information about your trading plan. That consistency can help you make those gentle tweaks that just might be enough to turn it profitable. Trade a plan for sure. Oleg, good morning. Jason, good morning. Caesar, level 2, good morning. Lamus, positive, patient, and humble. Great thoughts for today and for everyone. Jim, good morning from Glenwood Springs, Colorado. Welcome, Jim. George, Tim, Andres, James, good morning. Shady Trader, good to see you. And the chef is in the room, Mike Magallanes. Rob T. Hello, John. Great news. You won't be going anywhere. I hope that you're right, Rob. I'm looking forward to having a nice, long tenure here at Top Step. And Ed Nelson, good to see you. Colin, good morning. Vince, Shady Trader, let's make that trillion today. Yeah, that would be something to do that, right? Oh, what's another trillion among friends? Holden Jones, good to see you this morning. Ram, Vicky, good morning. Trading Research. Murph, I told you my wife this morning that you sent this weather here from Chicago. Well, yeah, it kind of slides that way, right? So, well, by tomorrow, it looks like the sun will be shiny. It'll still be a little bit cold, and it will turn light somewhere around 6:30 and remain light until somewhere around 8:30 tomorrow evening. There's my weather forecast for you. Sharon, good morning. Edward, Jason, good morning. 36 degrees in West Texas. Oh, my goodness. We're not doing that again, I hope. Oh, goodness. All right. Well, stay warm. Stay warm. And stay positive today. Stay positive. Peace on earth is my mantra from this point forward. Let's take a look at the charts now. We've got some interesting things going on. Crude oil offering a pretty decent opportunity this morning near an important inflection level. Let's take a look. I've got the charts nice and stable for us this morning. And here we go. All right, so strong overall volume yesterday in the crude oil market. Let's bring up the daily and take a look at that. We've got the rollover finishing, and just looking at all of the contracts, not just the front month. We had a pretty good day in volume yesterday. We added 25,000 in open interest on a test of this weekly kickoff low. Now we are trading down below it. That 25,000 is also adding 20,000 of losses in open interest in the May contract. So really, in all of the current contracts of crude oil, we added 45,000 in open interest on this move and this test of weekly kickoff low. This is a big boost in that volume and open interest on this push down there. Interest in selling into this market. This weekly kickoff level, an important inflection level before the open. Let's see how this has played out. Demand continues to be in question, so we've opened, in essence, below that level. We've got probably our opening range relatively close to the high of the regular trading hour session. We've opened with a gap. We've left that gap behind. We've got another gap with which to fill down to here. All right. And then we've got another kind of a bunch of naked points of control with which to target if this market really grows some legs to the downside. And that is a distinct possibility today. We have broken an important inflection level, an important support level. I'm not going to be trying to step in and trying to pick a bottom in this market here for some time. I'm going to be trying to find opportunities to look for strengths to sell into. I don't know if and I don't think we're going to get much of a move back towards this weekly kickoff high, which is really right here, 61.50. If we get that opportunity, it's certainly one that I can limit my risk on. So don't want to fight this downside move. It's going to be difficult to get into. And just look for opportunities. Sometimes you're going to find those opportunities in the volume profile. Get close to a low volume node and see if that low volume node can remain resistant for you. But again, this open and push down below weekly kickoff low, don't step in front of it. Do not try and step in front of any market that is directional, especially right off the open, leaving the gap below an important inflection level. Plenty of visual levels to target down below. Yes, Lacey is saying good morning to everyone. She's got a little bit of an attitude because, as usual, she believes that she is the center of the universe and that I should only be talking to her. All right. So, E-mini S&Ps. We talked for the last couple of weeks about the possibility of the momentum to the upside falling off, and we're seeing that playing out now. Volume mildly higher on this move to the downside yesterday. I don't think we've really sunk our teeth into any downside move here just yet. We did add 7,700 in open interest. That's the preliminary number yesterday. So on higher volume and higher open interest, we do see that we are bringing some perhaps new business, new sellers into the marketplace. I think we're still a long way away from breaking market structure. So far, just if you can see it, we're still inside extended trading hour range. That might give us some opportunities to relax and look for good trade location as the day goes on. Yes, is she saying sell now? Yes, she is the center of the universe. Yep. So yesterday's low, I think, is going to be somewhat pivotal. We've got some lows here. It's almost like we're setting up a head and shoulders here, isn't it? We're going to have to keep our eye on that. So we were looking at a gap down below that is here. I'm just going to show loosely where it is. It's 40.37 quarter, which is down here. 40.37 quarter. Weekly kickoff is between that. Our first major gap down to the downside is right around down here. A gap close down there would be to 40.1450. You may want to put that on your charts. If we do get into that neighborhood, a gap close, a previous gap close, is a definite target. We've got this weekly kickoff low is just a kind of basically based on a naked point of control. It's probably the first one that is available to the downside. These are definitely visuals that price may look towards, but guess what, ladies and gentlemen? They're not going to make this easy for us, are they? They really never do. Lacey agrees. She says this is kind of hard to do. No overnight inventory, truly. No gaps. Our overnight low and overnight high are value low and value high from yesterday. This is what I'm kind of talking about. It may give us an opportunity to look for good trade location. We're putting in lower highs and lower lows in short time frame. We're looking for that structure to continue to push us to our new look to the downside. We've got a naked point of control up here. We've got another naked point of control up here. If the market turns higher, this was an all-time high in regular trading hour sessions. We have kind of an unfinished business, an unfinished low yesterday. If you look on the profile, there's no real excess at the low yesterday. So that's an indication that this short time frame auction to the downside may not yet be over. We checked basically to another week low here from back on the 14th of April. We have the same situation here. We have a poor low. Poor lows tend to be revisited. We may see an opportunity for us to see that level today. So Really, I'm going to be trying to focus on being patient, looking for a direction to present itself. Perhaps the opening range could do that. Not really going to be looking for that because again, we're in range and in value. So stay patient. Better trade locations may come as the day opens. Yesterday we talked about that because we were in range outside of value. The market opened. Our better trade location came within the first hour of trade, and then we got our nice push to the downside, leaving the unfinished downside auction down here. So going to be another challenging trading day. Again, they just will not make this easy for us. Take a look at the NASDAQ now. Okay, here we are. Almost a similar situation. We've got settlement up here with 13,794 and a quarter. We don't really have any overnight inventory with which to worry about. We're opening in range and in value. Opening range trade may provide an early opportunity for us. We're going to have to wait and see. The open interest, we only added 100 in open interest on the downside yesterday. That's a little unnerving for shorts. Volume was okay. It held pat yesterday, but it wasn't anything tremendous like a downside move you might think would be. So there's a little bit of kind of not cognitive dissonance in this market. You know, taking a look at that daily chart again, we were in balance here. We've broken out of balance as of the close from yesterday, but volume was okay. It wasn't tremendous. It is looking like a tough trade today, Michael. Absolutely. So be patient. If you miss something, don't chase. Another opportunity will come down the pipe. You let the market tell you, hey, this looks like a really good opportunity. Let's try it. Let's do this because, number one, it's cheap. Now into gold. Let's go to the daily. So volume also kind of holds pat, a little bit lower yesterday. We only added, again, another 100 in open interest. So this is like not a whole bunch of information here. And I apologize. The NASDAQ added 1,900 in open interest. So a little bit of a boost in open interest on that downside move. It's the gold that only had 100 increase in open interest. So we've got, higher highs, higher lows overall. Volume okay, not much of a change in open interest, but there was really not a lot to do here yesterday. Pushing up above, this is just seems to be following upside structure. We've got plenty of space above and below to get to weekly kickoff levels. Look at the 30-minute chart. Okay, we did have a little bit of a gap to the upside. The opening range, I don't think it's not the high or the low of the session. So we opened right about here. We've pushed higher, unable to take out the high of the overnight. There's a little bit of a caveat for any longs that might be looking for continuation. If you're looking for a short, sometimes that short up against an overnight high can provide a cheap opportunity for you. The market still has the gap. If we can't close this gap relatively early, I'll look for opportunities to buy weakness and see a continuation back to the upside. If we do close the gap, value high is right at the high from yesterday's range. If we reaccept inside value from yesterday, that could create a value area special situation play. Reacceptance inside previous day's value increases the probability of a move down to the low of value from that session. They never make it easy. Nothing is guaranteed. It's just probabilities. Take a look at the euro. Okay, we're getting a really nice test of a previous resistance area, weekly kickoff high here. It's 120.15. Now, what was resistance now appears to have become support. We did open with a gap. We are in the process of perhaps fulfilling another gap from last week here, if we can do so. We're finding a little bit of support here at weekly kickoff high, which is to be expected. Well, yesterday we lost about 1,900 in open interest. The volume, let's double check that volume yesterday. Little long, little disappointing for a continuation to the upside. Seems right that a pullback is in order. The beauty of this is we've been hanging here. We've had a lot of opportunities to look for a long against weekly kickoff level. Why would I do that? Well, resistance becomes support. It has shown a degree of support, and aside from that, it lets me limit my risk. If we get too deep below that level, might be just the market, might be price advertising saying, hey, this trade isn't going to look too good in a few minutes. Let's get out of it. It may just come down here, close this gap, and turn around. We don't really know, but I'm just loving the opportunity that it has given us this morning in regular trading hours to look for an execution at this weekly kickoff level. All right. And the 10-year, boy, oh boy, we are just really stuck on and testing this weekly kickoff high of 132 and 1930 seconds. 5 days in a row of play with it. Unable to accept above it. It is presenting as resistance. The more often we revisit it, the closer we're probably going to be to breaking the back of the sellers that we've found up there. But when, until we find acceptance above it, it's still a resistance level and still an area where I would look for opportunities. Here's the opportunity here, getting here, not quite getting there yesterday. The market trades to it, just kind of holds. Last night, we come off of it. We just kind of span yesterday's area of value. We're right back up at it now. Is this an opportunity for us? Well, it is. We can take this, and we don't have to risk a lot. We don't have to risk a whole lot to find out if we may be wrong. We get in here. There's only one tick above is the overnight high, which was tested 1, 2, 3, 4, 5, 6 times. It went up to that weekly that one tick over the weekly kickoff high. This is a high target area. I think there's opportunity here, ladies and gentlemen. There may be some fish over here. It's up to you to put your lure in and see if you can catch it. Whoops, I didn't mean to do that. I meant to do this. All right. We got some comments over here. 36 degrees West Texas. 32,000 years is 1 trillion seconds. If that helps, I understand 1 trillion. That's one of the things that I was going to be using. But yeah, I mean, a trillion seconds takes us back to 30,000 BC. 30,000 BC. It's just amazing how much that truly is. What are we going to do? It's just amazing. They're just throwing it around like it's a nickel. GMR, new here. Any tips on finding your strategy? Well, Gia, there's a million ways to skin a cat here. There's a myriad of different charts, time frames, types. Come to the group coaching today, Gia. Ask that question. Let's get into it. We'll have a little bit more time to take a look at that. I'm going to put that link in and register, Gia. Let me know you're there, and we can get into just kind of maybe we can set some sort of a basic structure of what things to look at, things to start to learn, and ways to start developing your strategy. I would look forward to having the opportunity to work with you that way. Yeah, market does what the market wants. Absolutely. Let it go from Frozen. Oh, my goodness. Targeting stops below 4,100 on the ES. Big round number theory. Doe Trader could be absolutely right. That big fat round number. All right. Let's take our deep breath. So we've got just a couple of minutes here to be ready for the equity open. I kind of missed the open yesterday. I don't like when I go too long. Still thinking about moving the start time for the market forecast to 7:45 a.m. Central to give us 45 minutes to talk a little bit more and look at some of the charts, maybe add some charts, maybe look at some markets that we don't usually look at that we think might be offering some opportunity. Let us know what you think about that. Let's take our deep breath. Humble, grateful, and creative. Peace on earth. Get out there and profit. You deserve it. We work hard at this. Make some money at it. Have a great trading day. I'll see you at group coaching at 1 o'clock. Dan will see you at 3 o'clock for the market recap. And I'll be back tomorrow at 8 a.m. Central. Until then, trade well.